Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Wednesday, October 14th. Okay, since I didn't do a market recap last night, I just want to hit a few high points from the day. Number one, JP Morgan and Citi both reported yesterday, and on first glance, they beat their numbers. Loan loss provisions were lower than expected, but then on the conference call, the CEOs were kind of downbeat, and that took the air out of the stocks. I went ahead and posted their charts on the blog. I'm not going to go over them here, but on the blog this morning, you'll find their charts along with charts of the KRE, which is the regional bank index ETF, and XLF, which is the spider financial sector. And you'll notice on there, in the case of JP Morgan and XLF and KRE, all were rejected at overhead resistance. So this news came out right at a critical time, whether, price is going to break out or get rejected at a key spot. Now, we've got Bank of America just reported as I'm starting the video here at 6:55, and Goldman is supposed to report here in a few minutes as well. So let's watch those and see if there's downside follow through on the indexes, or there's a recovery to, push it above those overhead resistance level. But right now, financials continue to trade very soggy. Another thing that happened yesterday, we got CPI numbers that came in soft, and that had a ripple effect through the commodities complex, because it put a big bid under the dollar, which was up about 0.5, 0.6%. That cratered gold, that cratered silver, that cratered the miners, which, we are long. It did, the miners at least staged a late day comeback, as it were. So I'm still in that trade. I'm hoping that CPI was just a blip, and that the dollar will resume its downward path. If not, it will have been a whipsaw, and we'll have to get out of the trade. But as it stands now, I think we're okay. I did look, gold was up marginally this morning, so hopefully, the miners can put in a green day and get back on, the right track as far as our trade is concerned. Otherwise, yesterday was mostly what I would just call a regular consolidation day after a big day on Monday. Now here this morning, futures were up nicely when I, sat down to start working on the morning note, and I don't know if this was the catalyst, but a lot of countries in Europe this morning have announced they're going back into COVID lockdown mode. So I don't know if that was the trigger, but futures have sold off quite a bit. I think SPY was up 10 or 12, and now it's down 7. And the Qs were also up nicely and have since turned red. So we'll have to see. We're still 2.5 hours from the open, so I don't want to get too excited, with how the pajama traders are trading futures, but certainly we'll need to know our levels either way. So let's get into SPY. This is the 2-hour chart. We gapped up the other day, tested overhead resistance at 354. You can see that was rejected, and now support has been back tested at the top of the gap. Now this morning, for you active traders out there, getting a break below 349 is your, cue to get short and try and capture this $2.5 gap fill down to the bottom of the box. Excuse me. But in the longer term, if this trend line holds at the bottom of the box, no problem. The uptrend will have remained intact, and then we can, get a bounce off that line and move higher. But should 346.50, 347 break, then you're down on the wrong side of the uptrend line, and now you're down here filling these gaps and possibly all the way back to 342, and that's something we certainly don't want to see happen to our long positions. Here it is on the 30-minute chart. You can see that the uptrend line on the 30 was violated, and now we're down here testing the top of the gap. If that fails, we'll fill that. Hopefully that will hold and we'll get a ricochet higher. Qs, pretty much the same kind of a look, although this is a much tighter consolidation than what was shown on SPY. We got the big impulsive move higher. We reached up and touched this overhead gap where it was rejected, and then all day yesterday was spent in consolidation between 293 and 297.50. So this morning, I think the key is 293. If we break below there, we're going to come down to this gap level at 289.50 and test it, and that is going to coincide pretty closely with the uptrend line. If that fills and gets down here into, the 286s, 285s, it's not going to be great, to be honest, because then we'll be on the wrong side of the trend line. If they were to bounce it right here and recapture it, that's fine. But I would really like to see, at a minimum, the top of this gap hold for, continued bullish action higher, and to hopefully fill this gap and retag the prior high. You can see that flag formation, that consolidation really well here on the 30-minute chart. If this morning, for you active traders, depending on where we open, if we were to open inside the box down at the lower end, 293, 293 and a quarter, something like that, you can get long right there with a tight stop below and look for a move back up to the top of the box. That would be a good risk-reward trade locations. But if you get stopped out, if price breaks below, you just got to get out and then see how it comes down and handles this gap. That would certainly be a place where, if you did not have a position and the gap failed, you would want to get short there and try to capture this $3 move right here to fill the gap. That would be a nice trade. And then at the bottom of that gap, you should be covering, and that would be an objective place to try a long once the gap is filled. IWM consolidation. The weak CPI number affected, put the brakes on this trade. It needed to consolidate anyway, so that's not a big deal. But you kind of want to see 162 hold in this uptrend line. Technically speaking, 160 is the real line that needs to hold. So we could give back a couple bucks here and not really threaten the uptrend line. But anything below 160, I think, is a location to get short and look for a move down to 157.50 and mostly, probably more likely, down into this area here towards the 155 area. So I really want to see 162 hold. Worst case 160. Below 160, it's going to look like a failed breakout. So keep that on your radar. Here's the nice channel we had on the 30-minute chart, and you can see where 162 lies in relation to that. And then your pivot here at 160, that's got to hold or we come back down. So it's a moment to sit up taller in your chair, especially if you've been riding this thing long and you've got a bunch of embedded gains. And if you've raised up your stops, just honor them wherever you may have located them. Facebook had the big move Monday, spent yesterday consolidating. I've penciled in what looks to my eye as a bull flag formation with a measured move. Should price break out up towards the low 290s, that aligns really well with overhead resistance. So from a technical standpoint, that seems to make sense. This morning, if you see a pullback to 273.20 at the bottom of the box, that's an objective long right there. So you can, get long with a stop just below, and that at a minimum, a move back up to this 278. See how it handles it. And if there's follow through, you can get a gap fill up to 282. So depending on your time frame, I think trying a long right here at 273 would offer a good risk reward. And just like anything else, you set your stop just below, and if it fails, it's going to come back and make a run at this gap from Monday morning. So we'll have to see how that goes. Apple traded a lot weaker yesterday. I mean, this doesn't look like the consolidation we just looked at Facebook. Had the big run Monday into that event yesterday with the 5G iPhones, and it's been soggy, ever since then, and has come back to this 120. You really got to have 120 hold here, or you're back into Monday's gap, and then once you fill Monday's gap, you're back to where you were, Friday at the close. So that would not be a very inspiring look if this came all the way back towards 117, 115. That wouldn't look so hot. So I would really like to see 120 hold, and that's an objective place to try along with a stop right at the gap, and see if you can get a push back up towards 124.50 or 125. But it was soft, and I didn't look at it this morning to see where it was at. But into this gap right here, you're going to favor a gap fill. Tesla, just a bunch of sideways action between 440 and 450. If you get the breakout at 450, you're looking at 460 and then possibly 475. But if you lose 440, then you're looking at 430. So pretty tight action in Tesla. But 450 and 440 are definitely your lines to trade against. Microsoft, consolidative action here. Again, this looks like a bull flag to me, and if the flag were to break out, I've got a measured move pushing up towards 340, which would be really nice since we're long. Again, if you see a pull in this morning down to 221, 221.50 at the bottom of that box, and you're not in already, I think you can get try a long there with a stop just below. But just like all the other setups we've pointed out, if things get really soft and you lose that flag right there, then you're coming back to 218 and testing these lower levels, and it wouldn't have that flag look anymore. So I'm really hoping that this 221.50 area holds and that we can get a push higher this afternoon. Amazon flagging action, rejected at the gap, spent the day consolidating in this 34.25 to 34.90 area. It's a pretty wide range. If you were to try and get long here at the bottom of the box, 34.25, I think that's an objective level to try along and then look for a push higher. But if you lose that level, then of course the chart looks more bearish if there's going to be a pullback. So to my eye, 34.25 is your pivot. Bullish above, bearish below. Same idea here with Google. $20 consolidation range between 1567 and 1589. Use 1565 as your pivot. Above is bullish, below is bearish, and you don't want to lose this trend line if you're have longs. But as long as this holds, I think the bulls are still in control. Netflix had a nice day yesterday, actually. It did not do a lot on Monday. It was basically hovering here between, in a pretty tight range, came down and tested this uptrend line, and it held. And then yesterday popped above and reached up to this 555 area. That is the level that I would mark. This 555, 556 area. I think if you get a breakout above that, if you weren't long from down here, you can establish a long and then look for a move up towards 600. I saw a lot of call buying activity where the institutional players were looking for 575, 580, 600 up in that range. So if the Qs can hold it together here and not pull back too drastically, and then Netflix can break above, I think you got a good chance of making 600. And if you notice, this is really nice technical action, guys. Look at all the touches along the way of this trend line, and it just keeps holding. That's really what you want to see. And then eventually it'll come back and break that trend line, and that'll be your cue to step aside, especially if you had gotten long at lower levels. This big C we put on the radar, flagging action right under key resistance. I would have 104 alarmed, and you can look at lower time frames too. Maybe it's 103.5, 103, but this level here, actually, what is that? They have it at 102.86 right here, so say 183, or excuse me, 103, sorry. Get long on a break above 103, and then look for a push towards 107 and potentially 117 up here. So this looks like a bull flag to me off the bottom, and if we get a breakout, we'll have a measured move up towards 115, 117. So that would be a nice trade. Just to wrap it up here quickly, I posted these static charts in the blog this morning. Three software ETFs. This is Hack, the cybersecurity ETF, challenging the prior high here at 50 spot 50 and a half. A breakout here would be a nice objective location to try a long. Same kind of look here with IGV, the overall software ETF, testing the prior high back here at say 333. And then SKYY, which is the cloud sector ETF, also testing its prior high. So, I mean, software has been really strong. I even pulled up a chart here of DOCU. A lot of people were talking about that yesterday. You know, a long consolidation. What do we got here? 3 months of consolidation, now just peaking above this 230. I think you can get long there. Check earnings when that date is, but we've got a measured move. Let's see, 185 to 230. That's $45. 45 on 230 is 275. So this measured move projects back up to a test of the prior high, and I can certainly see that. You know, it's been a strong stock, spent a long time consolidating, and I think if, you know, the broad market stays constructive, you can see 275, 280 out of that, and then after that we'll have to see how it handles the old high for more. But pretty objective entry right here this morning against 230. That's about as tight as you're going to get it if you weren't in already down at the bottom of the box. And that's a thing that I made a point of in drawing the financial charts of KRE and JP Morgan and XLF. If DOCU has been on your radar or was on your radar, and you see this range developing, this 185 would have been a great entry, and a very objective one as well, because you had that level tested 3 prior times, here, here, and here, and support is support until and unless broken. So on this run down here, you had 3 days where you could have bought at 185 with the simple idea, I'm going to ride this back to the top of the box, and you got that $45 move. So that was a great trade, and it was a low risk trade as well. I mean, you're at support that has been tested 3 times. You can set your stop right below, and if you're wrong, you get a paper cut. If you're right and it goes back to the top of the box, you got a massive win. So that's, if you saw that, that's how you should be thinking. And you can do that, of course, on any stock that's been consolidating or trapped in a range. Sell resistance and buy support. That's how it works. Okay, it's 7:20. We're 2 hours before the open. Let's see how futures goes. Let's see what happens when the big boys hit at 9:30. Let's watch how Bank of America and Goldman trade. We saw Citi and JP Morgan go red after decent numbers. Sentiment is just not there in the financials right now. And I know we've had little fits and starts and, people talk it up and pile in. I just don't like them. I just, they haven't proven it with price. Someone pointed out that, just recently they got back up to the 2007 highs after, 12 or 13 years. They're just back up to where they were. They've been lagging the whole time. I don't see them really getting any traction right now. But, if they break out, I'm happy to get long. I have my doubts. So let's put it that way. Let's see how they trade today. Let's watch IWM in the same regard with the value cyclical trade. That'll drive off the dollar today. Let's see if there's dollar strength follow through, which will hurt precious metals and miners, or if the dollar reverts to being soft and being red today, which should be a tailwind for our gold miner position. So, I did want to make mention, and I forgot to go over it. NIO, N-I-O, we're long NIO. It has popped 10% in the pre-market, which is great news. We'll have to decide how we want to handle our calls, whether we just want to congratulate ourselves and take the win off the table, or roll higher, or spread our position. But we definitely want to get paid somehow on being long NIO with that 10% pop in the pre-market. I have not even tried to figure out why, whether they reported news or what it was. Maybe China auto sales or something like that popped the number. But anyways, that was real nice news to see when that popped on the screen this morning. So anyways, please hit the like button and pass the link along to those in your trading circle that may benefit from the content. Certainly subscribe if you're new to the channel. I really appreciate your time this morning. I hope you found the content informative and useful. Also, over in the show notes, you can find links to the blog and how to register for my content, where you'll get notification each and every time I publish new content right to your email box. Makes it really convenient so you don't miss a thing. So I hope you have a good morning of trading. I'll look forward to speaking with you later in the day. Should I see anything, any market developments, I'll certainly pass those along to you. So this has been Chris Buss with Traders Profit Compass. Talk to you soon.